Hey, what's going on, folks? My name is Chris, and in this video, I'm going to show you guys how to use the conditional order functionality inside of the Trader Workstation software by Interactive Brokers. I made a video about this 4 years ago, so this is going to be a well-deserved updated video on how to use the conditional order functionality. Specifically, what we're going to cover today in this video is how to transmit option orders for stock options when an underlying market like a stock or a futures contract or some other market achieves a price point. So for example, the S&P 500 market, the stock ticker symbol SPY, when SPY reaches a certain price on the upside or the downside, we want to submit option orders for trading, either individual option legs or option spreads, and I'm going to show how to do both of them in this video. On top of that, I'm going to show you how to potentially save a good amount of money on trade commissions when you're trading options by enabling a feature called Post Only in the Trader Workstation software. Let's get into it right now. If you guys want to support my content, check out Interactive Brokers using the first link down below and open an account with them. If you're an international client, I would say they're one of the best brokers for trading US stocks and US options if you're international outside of the USA or in the USA as well. So let's talk about it right now. So I've got my Trader Workstation software here open, and I have a layout that I pre-made, and you can make this exact same layout by going up to New Window and adding in each one of the widgets one by one. So I'll tell you what each of the widgets are. On the left, we have the Book Trader. I've resized the columns and fit it into this left side corner here. I also have two of their legacy charts. So one chart right here, which is set to a symbol SPY. And I've also disabled the grouping functionality so that it doesn't automatically change the symbol every single time I click in my watch list down here. And the way I did that was by selecting this drop down and then going to group windows and then just changing it to no group. The second chart in the bottom right hand corner has a group enabled. So whenever I select a contract in my watch list, it will automatically change the symbol of that chart as well as the book trader to the symbol that I clicked on in my watch list. And finally, I have an option chain, which I will use to drag in individual option legs as well as create option spreads for trading. Oh yeah, and I almost forgot, I have the quote monitor here, which in my opinion is one of the best widgets in Interactive Brokers TWS, which can be used for both analysis of real-time quotes and submitting and managing orders and positions. Now what I'll do is I'll start by just getting rid of all the symbols in this quote board. So I'll show you how to add things in. So one thing I'll do is add in the portfolio tab, show you how to add that into the quote monitor first before we start. So on the headers of the quote monitor, I'm going to right click on the plus, then select portfolio window. Now I have the view of the portfolio window here. As you can see, there are no open positions in the account currently. Yeah, and the reason why the portfolio window is useful here is because sometimes traders want to see very precisely what positions they have open, and you can actually use this to close various positions in your account and multiple option legs at the same time if you want to. Let's go on with this now. So I'm going over to my quote monitor named test, and I'm just going to add in a stock symbol named SPY. I'll click stock smart just to see the price of that. So I'm just resizing the column so I can see the price. Next, what I'm going to do is add in an option contract or an option spread. So I have my option chain right here. I can go ahead and click and drag on an option contract and just drag it right in like this. Now, note that if you do have the strategy builder enabled on the option chain, you will not be able to click and drag on a single leg. It doesn't work when you have the strategy builder enabled. Now, you will use the strategy builder to create option combo orders and add them into your watch list or quote monitor like this. So I'll show you how to do that now. Let's say we want to create a put credit spread. So let's say I go to a different expiry, let's say 1 day in the future right here, and we're on SPY puts and calls for this option chain. So I'll create a spread. So let's say I want to sell the 520 put. I will click on the bid column right there, and that will let the strategy builder know that I want to sell that particular contract in the spread. And then I'll go one or two contracts down and I will select the ask column. I'll click on the price in the ask column, letting the strategy builder know that I would like to buy this contract in the spread. So now I have two contracts in my spread, and it's called a bull put spread. And what I like to do sometimes is maximize the option chain like this, so that way you can clearly see everything. And I probably should have done that before, but it doesn't quite matter. You can send your orders from the strategy builder as well, but I'm not going to do that now. What I'm going to do is select add to watch list right here. And it tells us that the contract has been added to our quote monitor named test. And if you're wondering which watch list it's going to add the contracts to, it's always the watch list that was last selected. So in that case, I was working with this test watch list here. It's going to default to that one. So normally it shouldn't be a problem. So now in my watch list, I have a call option here and I have an option spread. So let's show how to submit conditional orders on this. So we want to create a condition that says when SPY reaches a price of 521, for example, we want to buy this call option or maybe sell this call option. Let's show how to set this up. You first have to create the order ticket for the option or combo that you want to trade. So let's start with the individual option. So I'll right click on it in my watch list and I'll select buy because I want to buy the option. You can set up your order with the quantity that you want and the order type that you want and the order price that you want and the order routing that you want. And I'm going to talk more about these items here in a second because they're actually quite important for certain problems that you might face when using conditional orders. But I want to continue without them for now just so I can show you the problem first and then I'll solve it. So once you have your order ready to go, you don't press transmit right away because if you transmitted it, it would transmit like a regular order without a condition. What we want to do is right click on the order, so anywhere on the line of where the order exists here, and then go to modify condition. Now we'll get brought this new window right here, and what we're going to do is select add on the right side of this window, or we can double click right here on this empty line and it will allow us to create a condition. Now these are the available conditions that Interactive Brokers supports in TWS by default. And what's cool about these conditions is that they're all server side. All these conditions that you create, that you assign to your orders are all server side and they're managed by Interactive Brokers as servers. So you can disconnect completely from the software and these conditions will still be active for your trading account and for the orders that you submitted them as, okay? Sometimes in other trading software, if you're doing any type of algorithmic trading, sometimes we have these things called client-side conditions, like a client-side algorithm that only works when you're logged into the software or when you have the application running on your system. With these conditions, because they're built right into TWS, everything is controlled on the server side of IB. So if you log out, everything is still going to be active. Now, regarding the conditions that you can choose from, these are the ones that are available. In my opinion, the price condition and the time condition are the ones that are the most useful. The other ones are a little bit arbitrary, but that's just my personal opinion. So let's stick with the price condition because that's the one that is, pretty much the most common. So I'll select price. And like I said earlier, I want to buy this option contract when SPY, the ticker symbol SPY, so I just typed it in right there into the field. I'll press the enter key. And then I'll select Stock Smart, just to keep it simple. When SPY is greater than or equal to a price of 522, I want to buy the option contract. So now once you're ready with that, you can select Finish. And now you can see our condition is populated in this window. Now, if you're doing after hours trading, which normally you're not because options are traded during regular trading hours, you would check this box. So if there's a scenario where you might be trading futures or stocks after hours and you want the condition to be satisfied and activate the order outside of regular trading hours, you would enable this item right here. But because we're trading US stock options, we do not need this, so I'll leave it unchecked for now. Now once you're ready with that, I'll select Transmit. Sometimes you'll get an additional warning about the price management algo. Normally this is not a problem. You can just select always use and read about it later about exactly what it does. So I'll select always use so it doesn't prompt us again. And now if you look at our order, you can see it has a green highlight. That indicates that it's a conditional order. Another way you can see that is if you go to, for example, new window, order management, orders, and bring up the orders window. and you can see that our order here has a green highlight. Whenever you have a green highlight, that indicates to you that it's a conditional order. This order has a condition assigned to it, and it's waiting for that condition to be true before the order being transmitted. When we have a blue order status for an order with Interactive Brokers, it indicates that the order is being held and monitored. In this case, it's being held and monitored because it's a conditional order and our condition is not yet true. Now, what I'm going to do is change the condition so that it becomes true faster. So right now, SPY is trading at a price of 520.85. So I'll go ahead and right click on my order and go to modify condition, and I will change the price condition from 522 to 521. Let's say 86. Finish, transmit, and let's wait for the market to get to that price. Okay, so I'm going to modify the condition one more time. Okay, so now we have our order that's been transmitted because our condition is true. And what we can see is that the order is transmitted, and it's transmitted at the limit price that I've set, which I changed it to 95 cents in this case. Now, one of the main problems with this that I think most of you are already aware of is that if you use a simple limit order type, the limit order price doesn't automatically adjust to where the limit order price might be when the underlying achieves the price that you set in your condition. So the problem here is that we need to be able to tell our order to trade on the current price of whatever the option price is trading at the time where the underlying reaches our trigger price. So there's a few workarounds here, and I'll mention a few of them now. I'll just exit this position. Now, the thing with conditional orders in TWS is that not every single order type is supported with order conditions, and this is a limitation from TWS. Now, the other thing is that these conditional orders are not even available in most of the other software that is offered by Interactive Brokers. They're currently only in TWS. Maybe they'll add them to the other software in the future, but I'm not sure. So not only are they only available in TWS, but they're only allowed on certain order types. And those order types are market, limit, snap, mid-price, and relative. Now I'm going to show you a few different workarounds of how to get your limit price to automatically adjust to where the market is at the time your condition is triggered. The first one is using an algo that's built into Interactive Brokers TWS called Adaptive Algo. So the way we do this is we set up our order for trading on the option. Then we go ahead and we change the order type to IB Algo Adaptive. And then once you do that, you select the limit price and you change it to market. What this is called is an adaptive market order. And what it does is different than a simple market order. When the order is transmitted, it scans the available exchanges and the current national best bid and offer that's available in the market, and it aims to get a fill somewhere in between the spread. And what's interesting about the adaptive algo is that, number one, because it's a market order, it works with conditional orders. And number two, that there's sort of a priority setting. You can choose it to be more patient to try and get you a better price, or you can choose to make it more aggressive to try and get the fill as fast as possible. The advantage of using this is that you don't have to set the limit price. So you can set your conditional order of SPY reaching a price of 521, and when it reaches that price, it'll go ahead and submit this adaptive market order, and it'll automatically know that it needs to be looking for a fill on the current bid offer spread of the option contract. One thing to note about this is that it might result in higher trading fees compared to some other methods that are available in Interactive Brokers, other order types, and I'll show you those in a second here. The other thing is that this adaptive order type does not work on option combo orders. It only works on individual legs. So let's show how this works now. So I selected adaptive, I changed it to a market order. Now what I'll do is I'll go ahead and modify the condition, and I'll put in a price condition for SPY like I did the first time. And I'll say greater than 521.65. Finish, transmit. So I'll change the condition one last time to 520.50. 520.59. And let's wait for it to trigger. So here's 520.59. The order is now active. You can see we have a green order status, and our order is filled at a price of 93. So I would say it wasn't a great fill, considering that the offer is still 92 on that option contract. And that's something that you might experience with the adaptive market order, is that sometimes it will just be like a market order and you'll just be going in and taking the liquidity, and you might pay one tick above the ask in some case. And that's why this is not my favorite method. I'll submit an adaptive market order to exit the trade now, and I got out at 83. So the fills are quick. The disadvantage of the adaptive market order is that sometimes it ends up taking liquidity and resulting in a bit of a higher commission fee than you'd pay if you didn't take liquidity off the order book. The fills are typically fast, even if you set it to the patient setting. So you have to experiment with it and see if that works for you. The main advantage with that is that it works with conditions and it auto adjusts to the current spread of where the option is trading. So you can use that potentially as a stop order as well as an entry order. So you could say, if the underlying goes to a certain price, I just want to adaptive market sell my entire position. And what's good about the adaptive algo is that it kind of follows the market around and it aims to get the fill. So you'll get out. You might not get the best price, but you'll get out. And sometimes that's essential. What's more important is getting out rather than getting the best price. So it really depends on what you think is best. Now, another workaround that I just discovered that I thought was really interesting is using a feature called post only, which only works for individual option leg trades or US stock trades as well. It does not work for combo orders. But we'll talk about combo orders. We're getting to that. That's in the next section here. Now, what's interesting about this post only feature is that it makes it so your orders never take liquidity. Let's say I submit a limit buy order at a price much higher than the ask. Because I have post only enabled by default, it will never take the liquidity off the order book. It's always going to be on the bid or one tick above the bid or whatever their algorithm decides it should do. And it basically makes it so even if I set my limit order price way far away from the spread like that, so it would essentially buy the ask, it's still a passive order. And I'll show how that's done now. So I'll transmit this order and it should fill pretty quickly, but we might have to wait a second or two because since post only is enabled, it has to wait for other orders to trade against it. So I ended up getting filled at 87 there. And if I go ahead and look at the order fill history, if we look at the commission paid on that one contract, it was 56 cents. Compared to the fees that I paid on the other two trades, which used the adaptive algo, they were a little bit higher. You can see that exit trade for adaptive algo costed us $1.50 for one contract. And that's something I've noticed sometimes is if you use adaptive algo or even IBUS opt, which is one of their newer exchanges, sometimes they have a bit higher fees unless you've set it up with them to have lower fees. Potentially that's something that exists too. But what I've noticed is that when you have post only enabled, you always seem to get those lower fees. Now, the way you can use this with a conditional order is as follows. So let's say I create another buy order and I want to buy, say, 9 contracts. I'm going to set the limit price to be at a price that I think is really much higher than the spread, because since post only is enabled, it's gonna be competing on the spread anyways, and I'm not gonna end up paying this price. I'm gonna end up paying an aggressive price that's on the current spread, and my order is gonna be categorized as passive, so I'll pay a lower commission fee. So now that I have my limit price in there at a price that I think is not even going to trade anytime soon, by the time the underlying gets to my conditional order price, this is not going to be the price of the option. It's going to be lower than this. I'll go to modify condition and I'll create another price condition and I'll do greater than 520.50 and I'll just override this. And you can see that the condition is true immediately because we're trading at 520.53 and I got filled at 86.9, which is pretty much in between the spread for those 9 contracts. And if I go ahead and look at the commission paid on those 9 contracts, it was $9.46, which is a little higher than I would have expected, I'll be honest with you, because I was doing some examples earlier that resulted in much lower trading fees. Like for example here, where we bought 10 and then sold 10 for $2 total commission on both sides. And I used the exact same method, whereas here we paid $9.46. Sometimes it has to do with the particular option and the liquidity available for that particular option. So let's do another example. I'm gonna sell my total position here. I'm gonna set the limit price to be extremely low, way below the bid price, like 30 cents like that. Obviously, I don't wanna sell at that price because I would be losing a lot of money. But because I have post only enabled, and also the price management algo takes care of this too, my order is gonna compete on the spread and probably trade somewhere close to the bid. And it should result in lower trade fees as well. So I'll go ahead and modify the condition and attach another price condition to this. So I'll do price of SPY. So now our order is transmitted because the condition was true. And we're filled at 83, which is the current bid price. If we go and examine the fee paid on that, you can see we actually paid $2 to sell a total of 10 option contracts. So I don't know why it charged us $9.46 for the entry, but it charged us $2 on the exit, which is good. So, and again, the P&L doesn't mean anything in this case because I'm just showing you various examples of entering and exiting quickly. I'm not really thinking about placing good trades here. Okay, so that's a potential workaround for the limit price, which is to set the limit price for a buy much higher than where you think it's going to be when your underlying gets to the price. Or if you're selling the option, set the limit price much lower than where you expect the limit price to be when your underlying reaches your conditional price, and make sure that you have post only enabled. So there's a few ways of enabling post only. You can enable it for each order individually, or you can enable it globally every single time you put an option order in. So I prompted an order right here. Right click on the order, go to modify order ticket, and then check the box called post only. You can also see that if you click on the order type, you can also enable post only here. To enable it globally, you go up to File, Global Configuration, and then Presets, and then Options, because we're trading single options in this case, and then scroll down until you get to the miscellaneous options, and then enable post only here. These are the only two options I have enabled right here. Now, another workaround for this is that if you're an algorithmic trader, you could just write a simple algorithm that auto adjusts the limit price to the bid plus a certain amount, basically to compete for the mid price. Although that is a little bit more sophisticated because you have to do some coding in their API. So maybe I'll do it. Now let's talk about options combo trading with conditional orders. Now, unfortunately, there is some limitations here because combo orders don't support all the same order types as individual legs support. The other thing is that combo order types do not support the post only feature that I just showed you, that results in your orders always being passive and typically resulting in lower trading fees. That's not available for option combos, so it makes it more complicated. So let's say you want to buy this bull put credit spread when SPY gets to a certain price. What order type can we use that will automatically adjust to the current limit price? Really, there's only one order type, and it's called snap mid. The other order types like limit or limit if touched or stop limit are also available, and they do work. But keep in mind that if you're not precise on your limit price, meaning that you don't know exactly what the spread is going to be priced at when your underlying gets to your trigger price, then it's more likely than not that your limit price is going to be wrong, and you're not going to be competing for price once your condition is true. Your order is just going to be left sitting there on the book. There is another workaround for this, which is, say you just wanted to use a simple limit order. You could put your limit order in at whatever price you think that the spread is going to be trading at when your underlying gets to your trigger price. And you can also at the same time go to your underlying stock and create a price alert so that you can be alerted when your condition is true. So let's say right here, I right click on the price scale, and then I do alert right here, create new alert. Now I can select at what price I want to place my alert. So let's say it's 520.60. I go ahead and create a price alert at 520.60. Now what that would do is it would send me an email alert when the market trades at that price. So I'm alerted, so I can go ahead and log in on IBKR mobile and then adjust the limit price of my spread trade to compete for the current bid and offer. So I can potentially get an order fill. Now, of course, that's a little bit slower because you're relying on email alerts, which are not super fast. And if you guys follow me, you know that I develop Telegram alerts connected to Sierra Chart, and that's a free open source tool you can use if you use Sierra Chart, which is a different trading software. Maybe I'll develop a similar version that works with Interactive Brokers one day. We'll see. So because email servers are typically a bit slower, by the time you react to it, open your mobile device, open the app, and start modifying the order, and you're fully logged in, the market's probably already continuing, and you're not competing for price. Those extra 10 seconds that you wasted could have been used for competing for price on the spread, which is pretty much what you should be doing. I think that everybody should have some algorithmic elements in their order execution, especially today when pretty much 90% of order executions are algorithmic, even more than that, because we have technology to help us, right? There is an order type for combo option spreads that is supported with conditional orders that can put your order on the spread when your condition is true, and that is a snap order, snap mid. What's good about this order is that when your condition is true, it submits your order on the spread plus your offset. So you could set your offset to be 4, and what it would do is it would set your bid price, if you're buying in this case, it would set your bid to be 4 ticks above the current bid price, which in the case of a spread would aim to get a more aggressive fill. So this is an example of an order type that does place itself on the current spread, and it's supported with conditional orders as well. The only problem with this is that this order does not follow the market. So if there's a scenario where you're trying to buy an option spread when the market's going up past a certain price and the market doesn't stop and it continues past it, therefore the spread price is changing and it's going further away from your order, there is a chance that your order can be just left hanging and not getting filled because this order does not follow the market. Whereas the adaptive order type does, the one I showed earlier. And also the second method I showed, which is setting your limit price at a much higher price than the ask or a much lower price than the bid and enabling post only, that's also a scenario where you're competing on the current spread, because post only allows your order to be passive on the spread, so you can set a higher price away from the spread and you'll only be executed somewhere in between the spread. I'm not going to submit this particular order type here in this demo account because I have to inform you that certain order types for option combos, they don't seem to work in the demo account. I'm not sure why, but they just don't. I noticed that if I do submit this, right, if I do just go ahead and submit this without a condition, sometimes you'll get it frozen in this state where it says transmitted, not yet acknowledged, and the order will just be there frozen and not doing anything. I don't know why it does that. It just happens sometimes in the demo account, but I did make sure that it does not do this in the live account. Of course, in the live account, the orders on combos all work perfectly fine. And the way you place conditions is exactly the same as the other order types. Now, I would say, based on the information that I've shared with you guys thus far, that you have more flexibility in your choices of getting better fills and potentially getting lower commission prices if you're trading individual option legs rather than executing the combo orders, guaranteed combos. So this is going to depend entirely on you as the trader. If your spreads contain a lot of legs, like 4 legs or more, then I understand why you prefer to execute as a combo, because or else you're going to have to put in orders on 4 different legs separately, which can get kind of hectic if you're doing everything manually. However, if you're just executing, say, 2-leg option spreads or 3-leg option spreads, then it makes sense to send the orders to the individual legs. So let's say you created an option combo like I did earlier here, and I dragged it into my watch list. So I have this combo right here. You can show the individual legs by right-clicking on it and selecting Show Legs. Now the individual legs appear right under it here in my watch list, and I can go ahead and execute orders for these legs individually using the methods that I showed earlier, like adaptive market order or a limit order with post only enabled. And the point of that, of course, is to trade on the current spread, follow the spread around, and get lower commission prices in the case of the post only enabled. So the way you would do that is submit the order separately. So let's say I wanted to put on this put credit spread, I would go ahead and put in an order to sell the 520 put, and I would buy the 518 put. Now I have my two orders prompted right here. And I used keyboard shortcuts to prompt those orders, but if you don't have those enabled, you can just right click and do buy or sell. So now what I'll do is, because I have post only enabled by default, let's say you just want to compete for the current price and just get in right now. It actually doesn't matter if I put my sell limit below the bid and my buy limit above the ask. Because I have post only enabled, it's going to ensure that these orders are passive and they don't take liquidity. So you can see once I've transmitted those two, they're accepted. They have the green order status, but they're not yet getting transmitted because they're submitted as post only. So they might take a few extra seconds to fill. So the buy side of the spread is filled. Now we're waiting for the sell side. I have a limit sell order at 139, which is below the spread, which technically should be filled. So we're waiting. And now it's filled. We sold at 144. And if we examine the commissions on those trades that just took place, you can see that we paid 56 cents a contract in both cases, which is pretty much the standard if you have post only enabled. And one thing that I forgot to mention is that I have my routing set to Smart Max Rebate by default. And the way you do that is when you prompt the order, you look at your destination. In this case, I have my destination set to Smart Max Rebate. So it defaults to the exchanges that are offering more of a rebate for the market that you're trading, in this case, SPY options. And the way you enable that is by going to File, Global Configuration, all the way down to Orders, Smart Routing, and then you have to enable it here under Smart Option Routing Algorithms. I have mine set to default as Smart Maximize Rebate, and that's going to only apply to option orders. You can also do the same for stock orders if you want. So once you enable it there, it's going to automatically default that every time you prompt a new option order for trading. Let's say I want to close this trade as a combo. You can do that. You can either submit the order on the combo itself, or you can select the two options by holding the control key. So I clicked on one of them, hold the control key, then click on the other. Now they're both selected. Then right click and select close as strategy. Now, if nothing happens when you do that, this is the secret to make it work. You have to have an option chain open, then you have to enable the strategy builder. Once the strategy builder is enabled, you select your options contract like I did here by clicking and holding the control key and then selecting the other option. Then right click and select close as strategy. And because the strategy builder is enabled, now it created our spread here in the strategy builder. Now we can click add to watch list and it adds it to our watch list. Now notice it created pretty much the opposite spread of the one that we initially had, which created these legs. This is something that I've noticed that is a little bit odd in TWS, and this also happens when you attach a pair trade. And I'm going to create a follow-up video on how to use the pair trading features in TWS, because those are pretty good too. But in this case, it created a debit spread rather than a credit spread. So right now, if we want to exit this trade, we actually need to buy this debit spread. We bought the credit spread to enter the trade. Now we need to buy the debit spread to exit the trade. I know that's a little bit technical, but if you wanted to execute your orders as a spread, you can do it this way, or you can just simply submit the individual orders to close them one at a time. So you can just right click on the individual leg and do close for both of them. And it will prompt orders that default to your existing position size with the correct order type. And then you can just go ahead and submit the order this way. So this would be submitting orders to close the individual legs. Now what I found is that if you close the options as individual legs compared to closing them as spreads, the commissions do not vary that much. Maybe comment below if you have a different experience. If you find that you guys get more rebates when you execute your orders as combos, let me know down below. But I found here just on my tests that I've done today that it's pretty much the same whether you execute on combos or on the individual legs. So far, I think we've covered a lot regarding conditional order execution on option contracts as well as on option spreads, and I've given you guys some general insights into how to execute option combo orders as well. The last thing I'll finish this off with is that if you do use combo orders, keep in mind that the combos have their own presets and settings that are separate from individual option legs, and I'm sure you guys already knew that. But when you submit combo orders with Interactive Brokers, you can actually choose whether you want to let the combo be non-guaranteed versus guaranteed. And what that means is that you're allowing one leg to be executed before the other legs are executed. So that's called a non-guaranteed combo. And the way you choose that is, well, you can do it in your order ticket, a modify order ticket, and then you can adjust it here. You can select non-guaranteed. Or if you want the full options, you of course have to go into global configuration, presets, combos, and then you scroll down a bit to advanced combo routing. And these are the options that you can choose if you want to trade non-guaranteed spreads, which is pretty much very similar to if you submit the orders on the individual legs. I hope you guys enjoyed this short tutorial on how to use the conditional order functionality in TWS. Click in here if you want to watch my other tutorials on how to use TWS and other various functionalities that Interactive Brokers offers. I appreciate you guys watching, and stay tuned for the next episode where I'm going to cover pair trading and how to submit an order when another order is filled using the pair trading functionality. Thanks for watching. See you guys next time. Cheers.